Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick. Joel still out, unfortunately. He'll be back with us later in the week, but we have a lot of news especially for a Monday morning. We have Citigroup that just came out just at the top of the hour here, so we're going to talk about that, of course. Besides that, we have some M&A. We have Newmont acquiring Goldcorp. We have several offers, or one offer on the table for GCI. PCG is apparently filing bankruptcy, according to an 8K from Friday. We have some guidance cuts from LULU and TLRD brands, a guidance raise at CROX, and some ratings as well. Plus, two guests on the docket today. Our first up at 8:15 will be joined by Wragge Horner, Forex and currency trading expert at Simpler Forex. And then at 8:35, one of our favorite biotech guests, Paul Yook, co-founder of LifeSci Index Partners and the portfolio manager of the BioShares ETFs, BBC and BBP. He'll be on with us at 8:35 to talk about the biotech space. So a lot to get to today. S&P futures are trading down a little bit. Thank you very much, Chinese imports. Dennis, how was your weekend? I hope it was good.
Weekend was okay. Just actually been putting floor down in my basement.
Oh, no.
Yeah, so it was a lot of work all weekend here. It's coming along now, but so it was a working weekend for me, one of those. People say, I like doing stuff like that, though. Like some people say, why don't you just hire that out? You don't have to do that yourself. But you know what? You got to get your hands dirty every once in a while. So I sit on my butt all day for my trading job there. I got to do some physical labor every once in a while. Try to keep in shape, try to do something. I'm trying to do a little bit of running too. But my goal was with the running. And are you still running, Spencer?
Yeah.
Here's my goal. So, and obviously Canadian. So 1,000 kilometers in 2019. I want to try to run 1,000 kilometers in 2019. Maybe the chat can help me hold up to that. So I figure that's about 7 kilometers a week, or what would that be? So 21, you got to divide it by 1.6 to get to miles. So what is that, like 14 miles or something?
Well, the way I look at it
13.
is if you run 5K at a time, which is what I always did. So that's 200 5Ks, right? So
I was wanting to run 3 days a week, and I was going to say 7K each run, and then I'm 20K a week times 50 weeks roughly. You know, you're not going to go every week. Just give yourself a week or two off in the year, and you're at 1,000K. And I think, you know what, I'd be in pretty good shape probably if I did that.
All right, good.
It's doable. Sound doable? You want to take the challenge too? You should take the challenge too, Spencer. We're both getting in shape for.
Well, I didn't know we were starting. You just
I just threw you under the bus on this one.
You're just telling me right now.
We'll do the 1,000K challenge, or I guess it would be the 600 and whatever miles, or it would be 600.
All right.
It'd actually be a little bit more than that.
All right. All right.
Yeah, 60s and 100s. It'd be 600.
Fine. Starting, what's today?
600 miles for the American.
Right.
Who's going to take the challenge with me? Chat, who's going to take the challenge with
January 14th, we're starting 2 weeks.
Starting a little bit late, but, you know, that's okay. Better late than never.
Yeah, all right. So
we're starting late for the show here, too. So let's start with talk markets here, because everybody doesn't want to know everything about a personal life. Actually, right before the personal life, I hear you're in Florida.
Oh, I am in Florida. Yeah. If I look I'm in a weird room, I'm here for the Cannabis Capital Conference. I'll be here most of the week. I'll be back on Friday, but very excited. That'll start it starts tomorrow. So I'm here for that. Going to be hanging out with Tim Seymour, John Najarian, Danny Moses from The Big Short will be here, and a couple other big names. So very excited about the cannabis. If you're in the Miami area these next few days, come hang out with us. Benzinga or bzcannabis.com, and then you can find out where the event is.
So the event starts tomorrow.
Well, tomorrow's like a private. It starts on Wednesday for everyone else. Tomorrow's like a private.
Special for the Benzinga folk.
For like CEOs and stuff. And
when's Tim Seymour getting down there?
Wednesday, I believe. Yeah, Wednesday is the main event of the conference where you're going to get investor pitches, panels, the whole thing.
He's one of the nicest guys. We've had him on our show.
He is.
Tim is so nice. You know, you get some people, and not saying it, but there's some, you know, obviously, you know, he's on CNBC all the time. Some people get a big head. Not Tim. He's awesome. I like that guy.
He was at our cannabis conference in Toronto in August. He's a super nice guy. So,
and he knows what he's talking about too. Like, you get so many people, you know, that I think sometimes, you know, even myself maybe included, sometimes I don't know what I'm talking about. But you know what? He's one that I really believe, like when I'm watching Fast Money, he's one of the best people on there because he's so nice and he knows what he's talking about too. I mean, they fight a little bit. They all scrap a little bit on Fast Money. But behind the scenes, Tim Seymour, he's just a great guy.
Oh yeah, and he said, I've interviewed him before, and he said there are times I don't know what I'm talking about, and I like go back to my dressing room and I'm like wiping my brow because I got my butt kicked on, my butt kicked on TV. You know? I was like, all right, man, at least you can admit that.
Well, I think that's the main thing too. If you don't, you know, no, just don't try to BS it. Just, you know, whatever. I don't follow that stock, whatever. I respect Jim Cramer for that too. Because sometimes you see a call in on Mad Money. Yeah. He's like, I gotta do more homework. I don't follow that company. So, you know, that's respectful as opposed to just, you know, anybody can give a technical on anything. I've never heard of the stock and look at technical and do that in 5 seconds. But, you know, I already said it's one tool in your toolbox. I think there's more important to know, obviously, fundamental stuff because, you know, how good the PCG chart looks doesn't matter when they say they're going bankrupt. So, stock, which is a nice segue for us here, Spencer. So, give us the news here. I believe this came out. Well, obviously, this was last week. We know the stock already had the gap down because they said this was potentially on the table. An 8K filed here. Was it Friday night or Saturday morning? And it looks like that it seems like it's going to be imminent here.
Yeah, they said they intend to file for Chapter 11 on January 29th. It's the only viable option to restore their financial stability, to fund ongoing operations, and provide a safe service for customers. Also, the CEO is out.
So they got a couple weeks here, really, to try to find another solution, and it doesn't look like they're trying themselves here anymore. I mean, the one thing, and I will say this, and I've said this for a while here, that PCG is potentially a zero. So, you know, we've been right on that. But I also said, you know, if it bails it out, you know, it was a coin flip. You know, it's a zero or it's going to be, you know,
right
back.
Exactly.
You know, we were saying that when the stock was in the 40s. But now you look at it, it's still $10. So there's still some hope being priced in here. I mean, if this was really a zero, or if this was really bankruptcy, there's going to be nothing left for shareholders, this thing would be trading at $1 right now. So because it's trading at $10, it's telling me that some traders and some investors believe there is still hope here. And if I look at the preferred stocks, they often tell a story as well. There's a ton of them. So there's like 1, 2, 3, 4, 5, 6, 7, 8. I think there's 8 or 9 traded preferreds. And if I'm looking at those this morning, they're all down. They're all down 25% this morning as well on light volume because those things don't trade as
those don't have the those don't have the
quality. But I spit. So like PCG.PRA has a 1461 bid here right now. So, you know, I went through the financial crisis and I watched companies go bankrupt. And this doesn't look like a company that's like imminent bankruptcy here, because I watched Lehman Brothers preferred stocks go to zero. I watched, you know, a ton of preferred stocks go down to $1, $2, $3. And, you know, some of them came back. The HSBC, I always talk about that one that I bought at $3. And, you know, that ended up being the low on that preferred stock and went all the way back to the par 25. Most of these preferreds trade par 25. Some of them are still 15, 16. This is 1535 bid right now, PCG.PRA. That's like pricing like that. Somebody thinks is either going to be something left for preferred shareholders at the end of the day, or that somebody's going to come in here and like bail them out. That's what they're hoping, because otherwise these things would be like $2, $3. So I'm actually surprised with, you know, the filing here that the preferreds have held up so well. And, you know, and definitely if you're trading the common, that's something to watch. I mean, common don't go to $1, and the preferreds are going to be trading at $15, $16 on the 25. I don't think. So I'd be, you know, I don't think it's a slam dunk just short PCG here at $10 here this morning, because it's going to be a zero. It's probably going to be, the borrow is probably going to be tough too now, but it's not pricing in like bankruptcy is imminent. It's kind of weird, even though they've basically said it. They're pricing in some type of hope here. So I don't know what that hope is. I can't, you know, speculate on that. I can just speculate on the pricing action that I'm seeing. It doesn't look like bankruptcy is imminent when I look at those preferred stocks.
Well, you said you're seeing bids. Would you know when those bids were from, though? I mean,
they're live bids. This is pre-market. I can hit a 1535. Par 25 on PCG.PRA. You can hit that thing right now at 1535. So basically 15 on 25. What is 60% of the value still? That doesn't sound like a company going bankrupt when the preferreds are still. And these aren't traded bonds, I don't think. It's preferred. It's like, we got to go read it. I don't follow them all that close, but it looks like PCG 6% first preferred. So in an event of a bankruptcy, the bonds are going to be ahead of those too. So I don't know why they're still pricing in that high, 15.35. They're pricing in hope that, hey, maybe somebody's going to come in, or there's a utility company, or California is going to come in, or somebody's going to come in. There's still going to be something left for shareholders here. And we don't know what. Obviously, they're not pricing in much when they're $10 on the common, but they're still pricing in like there's hope here. So it's interesting. This isn't your typical bankruptcy setup. Like, I mean, just to put it in perspective, and we've talked about JC Penney forever, and it's $1.32. If you look at their traded preferreds, so like, and I'm trying to remember all the symbols here, but just bear with me. There's like 4 or 5 of them there. Here, I'll just go grab the symbols. I don't have the list in front of me. If somebody has them, they can tell me. It'll take me 2 seconds to go find them. So just looking them up here. So JC Penney, let's look PFH. PFH is an asset-backed trust, and these actually sometimes can be higher than the preferreds. So they're looking at these. It's trading at $8.
That's $8.
8 on the 25, and they haven't even said anything about bankruptcy. So you've got PCG trading at 15 on the 25. And they've already said they're potentially going to do Chapter 11. So they're pricing in like something's going to be left for those preferred shareholders. So this isn't like your typical, like, I would have thought, other things being equal, if PCG comes out and says, yeah, we're going bankrupt on the 29th, I would think those things would be $2-3 on the 25, and the common would be down $2-3. That is not the case here this morning. So there is some hope in here somewhere. Obviously, I'm not a fundamentalist on PCG story, so I can't tell you where that hope is coming from. But traders are pricing in some type of hope.
Especially if you just look at the PCG chart, it's bounced off the lows, and I mean, the low was 775 here an hour ago. A couple of 3 hours ago.
Something, and I'm not saying go out here and buy it. I don't understand why it's still $10 or 15. So I'm out. I don't have enough information here. I won't be trading any of these things. But if you're coming here just blindly shorting it, saying it's going to zero, I'm saying there's risk still to the shorts here that something is still cooking, because those preferreds would not be trading. And there is some trading $11, $10. But the one PCG up here is 15.35 bid here right now. Maybe it's because the borrow's tough. It could be other reasons behind it. But if you were long that thing and you heard about bankruptcy, I tell you, I'd be hitting a 15.35 bid probably, because I'd be nervous. So market's telling you something else is going on here. Price don't lie. We always say price don't lie.
All right. Well, we'll keep an eye on this one.
Though.
Except for when it does. We'll keep an eye on this one.
When it does.
We'll be watching this one as the next few weeks unfold. But before we go to our first guest, let's talk about Citigroup real fast. They had earnings right as we were starting the show. I guess it's the kickoff of earnings season. Hooray! Q4 EPS $1.61 versus $1.55 estimate. Sales 17.1 versus $17.59 billion. So an EPS beat and a sales miss. A mixed report from Citigroup, and they did trade down initially. But what are we doing right now here?
Holding up. You know what? It's holding up, and you've got underneath demand here because the thing's had a pretty good rally. So I think you get near the 55s. I don't think it's just a whoosh, like going to give back half the gains from the last couple of weeks. There's some shorts here who are underwater, people who are banking, the numbers are missed. And you know what? It's not down that much. So good news so far. Last earnings season, we were seeing the banks, rally initially on good, strong reports and give it all back. Kind of the opposite thing here. We're seeing the stock kind of hold up, not bad, considering, the report had a revenue miss there. So you know what? I don't know. From a day trading perspective, I almost want to buy it here. Lean on maybe the over. What's the pre-market low? You have that in front of you, Spencer?
Oh, I just switched.
As I'm saying that, it's going up.
Yeah, pre-market low. What is my low here? 55.29.
Lean on that. 56 bid for 20,000 right now. You know what? This thing could go positive. I'll call it. I think Citigroup would go positive here. It's a down day. It's a tough day for the markets. It's holding up pretty good considering revenue miss. So it could go positive.
Are you looking at the other banks this morning? I was seeing Goldman Sachs trade down a little bit here.
Yeah, and the market's down, so they're hitting.
That's true.
That's true.
That's true.
Yeah, they were going to be down no matter what, with the market trading down and TLT trading up. But Citigroup, it's trying to hold on. I think it wants to go positive.
All right.
We'll see if my little pre-market prediction comes true. I was saying that right around 56. It's 56.20 now. So we'll give myself 56.10 because the offer was 56.10 when I said that.
Fine. All right. Well, we'll check back in on that in a few minutes, but we're going to take our first break of the day right now.
Get hammered. I disagree, Skiji. I don't think it's
All right, we're going to take our first break of the day and grab Wragge Horner, Forex and currency trading expert for Simpler Forex. We'll be right back in a moment with Raghee. And as promised, we are live with Wragge Horner, Forex and currency trading specialist at Simpler Forex. Raghee, how's it going this morning?
It is an exciting morning. I know we got a lot going on with some Chinese data, so I've just been riveted to the screen already.
Yeah, so woke up. That's like one of the first things you see is the Chinese imports were down. So, I'm sure you probably had a nice relaxing weekend. You wake up on a Monday morning, you see some data you don't like, and tell us what that does for you as you approach this week.
I think like a lot of us, we watched some playoff football Saturday and Sunday.
Yeah, it was a great weekend.
It was a great weekend. And well, I guess it depends who you're rooting for.
That's true.
And then you wake up this morning, you realize you're going to be missing out on some data because of we're in the 24th day of the government shutdown. But the Chinese numbers for imports and just noticing how much the demand is softening, it just really is something I think the market's been pushing aside because of all the optimism surrounding supposedly patient Powell.
So we definitely don't talk about Forex a ton on this show, mostly except when we have a guest on who knows more about it than we do. So fill us in on what trades you've been eyeing and or making the past few months here in whatever currencies you've been trading.
For sure. So currencies to me, and I think this is something that a lot of futures and equities players could also benefit from. Currencies to me are the touchstone for everything I do because I'm a big believer in sort of dollar cycle theory, that it's basically cheap dollars that fuel not only domestic but global growth. And when you look at what the FOMC has been doing, they've been withdrawing dollars in the system. And you could see that first really hit emerging markets the hardest. I mean, it was just ruthlessly hard as all those US dollars with a couple of clicks of the mouse comes flying back home, get thrown into the US equities markets. And that might have been where a lot of equities players noticed that, hey, I'm watching emerging markets tank, going into bearish territory, and yet the US markets continued to hit higher highs. And that's kind of classic dollar cycle. So we spent most of 2018 long dollars. Now, I think probably the easy long dollar play is running out of fuel. But when you look at what's happening in Europe, they were looking at terrible data out of Italy, terrible data out of Germany and France. It's tough to think the ECB could hike this year. So I'm still very bearish on the euro, and I'm going to stay moderately bullish on the dollar.
Well, I'm seeing headlines here about the lira here. They're slipping overnight after Trump had warned Turkey about something related to Syria. Do you follow the lira at all?
I don't typically trade it. There's a number of ways to trade currencies. For those of you who are thinking it's Forex only, it definitely is not. The CME has a number of viable, currencies, and that's one of them. But I typically stay away from some of the more exotic, so to speak. They're not super liquid. They're very headline driven, and they can give traders who aren't comfortable with the leverage and the the volatility of currencies, they can give them a lot of headaches. So I try to.
So then how do you typically trade? Like
So
what?
Sure. So when it comes to currencies, I will highly recommend someone go through a Forex broker, but the next best thing, or if you want to play options on the currency pairs, is to go through futures. So either one of those are going to be fine. You'll end up having plenty of access to the main pairs that most traders want to watch. And that's going to be the pairs traded against the US dollar. So euro, of course, pound. We have a huge Brexit vote coming up tomorrow. Japanese yen, which has been on a tear with the volatility and the concern about equities. Swiss franc, Australian dollar, New Zealand dollar. So you have access to the currencies that are liquid and I think that are going to be moving really nicely this year.
Yeah, and speaking of that Brexit vote, that's obviously something that matters more to your market than it doesn't matter too much to the U.S. equities market, at least right now. But how have you been trading that, if at all?
So Brexit, well, I mean, when Brexit first happened, it rocked the world. I mean, it just rocked the planet.
Right.
And then now we're just kind of used to these sort of populist victories throughout Europe. But I think there's going to be enough concern for traders looking at the pound and maybe the US dollar. Theresa May, Prime Minister May, has her back against the wall. Even if she can get this vote through Parliament, she's still going to have to deal with the European Union. So what I've been telling most folks is this is where the futures side of it is really much, much safer. Play the options. Pound has been quite weak, but the problem is if there's any forward progress on Brexit, the pound tends to like to rally. So I think there's a couple of ways we can circumvent that by just playing the EWU and just shorting the FTSE. That's been pretty darn good. But for the most part, traders might just want to wait and play the aftermath of all this volatility.
Got to ask you about China, though. I'm sure you're trading that.
Oh, the yuan has been, I'll tell you what, if you want to see a canary in a coal mine, and I was just talking to the traders in the room, and I just said, it's interesting. We've been talking about China since last April because you could actually see the People's Bank of China slowly, very incrementally during the Asian fixes, weakening the yuan, and that the yuan-US dollar relationship just started to head lower and lower. And this was before the trade war really got public. And the interesting thing about that is the People's Bank of China knew there was a slowdown in China. And I'm talking 2018 April. So fast forward some of the data we're seeing, this is just a pretty mature story that a lot of traders are just starting to take a look at now from the aspect of optimism about the trade war. But minus the trade war, China's still in a good bit of trouble.
I got to ask you, Raghee, did you see the video from the Bank of Jamaica, the marketing video that they made?
Oh my gosh, yes. Best thing ever. Best thing ever.
Yeah, more central banks need to be like Jamaica.
Oh my gosh, best thing ever. And you know what? If you look at Jamaica's economy, I mean, I guess they're doing an all right job, all things considered. But yeah, that was a fantastic video. You're right. Everyone should take note.
Why can't we get, Mr. Powell and Miss Yellen and Mr. Bernanke, get them together and make a video like that? That's what we need.
They would need a sense of humor. So I don't know when they do that, but yes.
Okay, that's true. All right, Raghee, before we let you go, any final thoughts here? Like we mentioned, we had the weak Chinese data this morning, which is why we're down here this morning. But any thoughts here as far as how the week could progress in the U.S.?
Sure. I mean, we're kicking off earnings season, as you guys well know, and we're seeing Citibank already start to have a bit of a letdown. All my cards on the table. I'm short XLF, and I'm not looking for a great earnings season. I think that the markets are pitting all their hopes, not just some, all their hopes on Powell. I think maybe the Chinese trade war resolution would be, great, but there's just way too much emphasis on getting back to Jerome Powell being able to cut rates, and I don't see that happening. If it even gets to that point till September at the soonest. We'll probably get a hold in March, maybe a hold in June. So it's Q3 or Q4 before traders start getting those cuts that they want. And wow. I really don't think he's got if he had his way, I think he'd hike in March. But I think the market's got him up against the wall.
Wow. All right. Wragge Horner, Forex and currency trading expert for Simpler Forex. Wragge, as always, thanks for the time, and we'll talk to you later in the year.
Great to talk to you. Thank you so much.
All right, 8:24 here, Dennis. I want to go straight into this M&A we had this morning. Gold Corp and Newmont. Newmont is acquiring Gold Corp in an all-stock deal valued at $10 billion. The ratio I have written down here, 0.328 Newmont shares, 0.02 Gold Corp shares. So if you look at the chart of GG, obviously it is trading as, well, actually it's giving back some. It hit the high of $11 right on the
because
headline
Newmont's
there.
down.
Right.
When you got the all stock deal, you're going to see it coming.
Exactly.
It's going to trade off the Newmont price. Newmont's trading down $2 because they're paying the premium. We know them smacking the acquirers around. I mean, this Gold Corp, really, it's been a disaster story forever. You can say, what you want about gold having a nice little rally in the last couple of months, but let's put it in perspective. I can say that because I took Gold Corp, and that was one of the long-term holdings I had, one of the only gold stocks I owned, and I sold it just last year, and I don't even remember where I sold it, but I just sold it for the tax loss, and I think I sold it even mid-year. But anyways, I took a big loss on it, and it's still a disaster. So here you get a takeover. So the story is basically it's going to become Newmont Mining, but it's 1065. This was the $50 stock back in 2012, a $40 stock in 2013, a $30 stock in 2014, a $20 stock in 2015. It's now a $10 stock in 2019 on a takeover. So
can't catch a break.
No, I know it gets taken over, and you're still not making much. And gold, and there's been a few like Barrick and Gold Corp have obviously underperformed. Newmont's held up better because if we look where Newmont was, it was $70 back in 2012. It's $35 now. Agnico Eagle Mines has held up better. So you can see there's been some that have held up better than the others. This one's been a dog. It's still even a dog on the takeover. It gets it's up 9%. Gets taken over and you make 9%. So yeah, it's a win for the longs here because they're up 9%. But usually when I get my stock taken over, I like to make more than 9%.
Second major acquisition we've had. We had Barrick Gold acquire Randgold last year, right?
Yeah, that was last year.
Right.
Yeah.
Seeing some consolidation in this space.
Yeah, I mean, gold, let's still put it in perspective here. I mean, gold, yes, has come back a long ways, but the cost of production has come up, over the years as well. So these companies aren't as comfortable as they used to be. Where are we on gold? What, 1,200 or something?
Yeah, 13, a little under 13.
Say 1,300, but the cost of production to a lot of these companies 11. So the margins aren't that great when you were sitting, and it used to be cost of production. I can remember years ago, $600-700. So it continues to go up, yet the gold price doesn't seem to stay with inflation. I mean, gold has been an underperforming asset class for 30 years. I mean, you just look at it relative to stocks. You've been very, it's been very poor performing. I mean, if you look back, and I don't have a chart, where gold was, but you can even go back into 2011, 2012. We were $1,900 now. So just going back 9 years, it's been
it was 1900.
Yes,
1900.
Where, and like 1980, it was like, where was it? Like 19. That was like over 1,002.
I'm just going back to 2011. It was 1900. I mean,
1900, 2011. But we go back like the 80s and 90s. Gold was in the thousands as well. So really, you've gone nowhere. Inflation's went way up. And you can say, oh yeah, gold protects you against inflation. Well, it has in the last 30 years. It did if you bought it in the lows when it got down to $300 back in the early 2000s. So it's all timing to a certain extent too. But I believe gold, I'm just going from my memory, in the 80s was over $1,000. So I think it was. I think it was, Spencer. And if anybody can verify that.
All right. I was gonna ask if there's
1980s. Let's get Google will answer this question. Like my charts don't go back.
So I don't know if there was. I have a chart going back to the 80s. I'm seeing it, 400, 500, 600. But I don't know if there was some splits involved in the futures or.
So $600, 1981. Oh, here's historical gold prices here. This will be good. So I just clicked on.
I was going to ask though if there was any more room for consolidation. I don't know.
1981, I got $1,900.
Okay, my chart.
I don't know if that's right. That's what I have on this one.
Right, my chart's not showing that. So I don't know.
I
don't know. I can't speak to prices from before I was born.
In any regard, here, this has not been. When you look at the Dow was 1,000 back in 1980. Even if gold give it $600, so it's doubled in 38 years, and the market's up, from Dow 1,000 to Dow 25,000, whatever, 25-fold. Gold has massively underperformed in the last 30-40 years. And that's why I own almost zero gold. I had a little bit of Gold Corp, which I sold earlier last year, because I was always talking bad about it on the show, and I was like, I can't keep talking bad about gold and have some of my portfolio, so I got rid of all of my gold. I told you my hedge was Virtue Financial. That was my insurance.
Yeah.
Say, oh, you got to have gold in your portfolio for your portfolio insurance in case the market goes south. I say when the market goes south, Virtue Financial does pretty good, and that obviously worked out fairly well. So that's a high frequency trading firm. Obviously nothing to do with gold, but we know in a VIX environment that increases, and that happens when the market goes south, that high frequency trading firms do better. So that was my portfolio insurance, was Virtue Financial.
All right, yeah, and I was going to ask if this could lead to more consolidation. I don't know what else there is to consolidate, though. I don't know what else is there to consolidate in this space.
There's not that many big players.
We've had the four major miners have come
through
here, so I don't know what else there is really. But that is the story.
I'm still not a fan of gold. I'm not a gold bug. If you've been listening to the show at all for the last 5 years, you know that I'm not a gold bug.
Let's go to the other M&A headline this morning here. This one not in the gold space, but in the media space. Gannett GCI has an offer on the table for $12 a share from MNG, better known as Digital First Media. This is from the Journal over the weekend here. I believe it was Sunday they first dropped this headline, and you can see the GCI chart reflecting that premium here this morning. Don't know if we have no confirmation as to whether this is going to go through or not, or anything. But
it's a hostile bid. So
it is a hostile.
Obviously, they go to shareholders there. It's a trade 1165, 1170. So the market's saying, there's something to this, or maybe they're going to get a better bid even. I don't know. On just, still just a rumor. It's $12. The stock is up from 8.5 there just 2 weeks ago, up at 12. If I was in this, I'd say thank you very much and ring the register. I wouldn't hang out for the last 35 cents. But maybe they get a better bid. I know a lot of things can happen, but stock's up 20%, on a hostile bid this morning. Yes, it's good news for shareholders of GCI, but the stock's come a long ways up here already. From 850 just a couple weeks ago. So I'd just be
I'm not sure what
I'd be happily ringing the register if I was long it.
Yeah, I'm not sure if you're looking for a lot of growth from your USA Today.
I put that in perspective. Here's GCI. You get Goldcorp get taken over 9%. You get a 9% premium. Here you still just got a hostile bid. You get 19. That's a hell of a lot better than the Goldcorp shareholders.
Yeah, I say take it and run is what I would do if you were in the GCI. But I mean, they are. This is what they do. MNG. This is what they're known for. So this one, I mean, the market's pricing in. There's a decent chance at least this is going to go through. So we'll see what happens to GCI. 8:32 here. A few minutes before our second guest of the day. Before we grab Paul, let's do one retail stock that had guidance this morning because there are a few. Okay. And let's start.
Give us a few. Just say them quick. Pound them out.
Just say them all quick. Okay, we had Lululemon and Tailored Brands cutting their guidance. And
Lulu's up.
I'm sorry. Lulu cut their let's see. They raised their Q4 EPS guidance to cut the Q4 sales guidance. Sorry about that. So a little bit of a mix on the Lulu. Tailored Brands, they cut also. CROX, they raised, and American Eagle during the show. What did they do during the show? They just reaffirmed and they reported their holiday sales figures. So some mixed signals here from retail, but let's look at Lulu because they were the first ones out. So like I mentioned with Lulu, they cut their sales guidance, they raised their EPS guidance by 8 cents on the low end of the range, and they raised their Q4 comps guidance by a smidge there. So that's the story on Lulu.
Nice pop. Up $4 here. I'd say the only thing is you get to that 140 area. That's where you struggled in December, where you fell straight off from. So you get back near that area, you probably find some resistance. But you know what? You think about the shambles that a lot of the retail sector is in. This stock is not in shambles. The stock has actually held up fairly well considering how much some of these other retailers are off. And the stores apparently are still busy. So, there's better places to short. If you're looking at opportunities to short, I don't know if Lulu is in the first place I would look. So I don't think I'm coming here buying it at 136 here this morning, but I'm not shorting it either because this has been actually one that's held up pretty well.
It's kind of surprising. I've never been in one of these stores in my life. I don't know.
You don't like yoga pants? You know where we're going to start running. We're running yoga pants. Can you run in yoga pants?
Yeah.
Everybody be staring at us.
What do you mean by you? What do you mean by you? If you're talking about me, no, I cannot run yoga pants. Some people can, I'm sure.
Hey, I'm 205 pounds. I wouldn't look very good. Either.
Okay, let's steer off this tangent.
Although I'm down from the 215 highs. I was back in the summer when I started to run. I was like, this is getting out of hand when I was hitting the 215.
There we go.
So I'm off the highs, but not that far. And the holiday season did not help me in the whole weight department. So I haven't weighed myself this year. I'll probably back up approaching 210. I feel heavier, so need to start running.
You're at perennial support there. All right, 8:35. Let's grab our second guest of the day, Paul Yook, one of our favorite biotech guests. He's the co-founder of LifeSci Index Partners. He is the PM for the BBC and BBP BioShares ETFs. We'll be right back in a moment with Mr. Yook. And welcome back, everyone. We are now joined by Paul Yook, the co-founder of LifeSci Index Partners and the PM of the BioShares ETFs, BBC, and BBP. Paul, how's it going this morning?
It's going really well. How are you?
Going pretty well, going pretty well. The year for you, I'm sure, is off to a busy start. That's like 2 years in a row now. We've had a major M&A kick off the year in biotech, and I know you were just at the JP Morgan Healthcare Conference, so let's start with that. Last week out there in San Francisco, what was the story of the conference?
Yeah, I think it was the M&A caught some people off guard. I mean, you had two stocks, Celgene in particular, trading at an unbelievable near-term low. And to see big pharma step in and pay nearly $80 billion for Celgene with a huge chunk of cash was a really positive factor. I mean, what we had here, by the way, just to set the stage, was through the first 3 quarters of 2018, you had really robust biotech performance, as well as very strong mutual fund and hedge fund performance in the healthcare world. And then come October, November, December, things really fell off a cliff, and it was almost kind of a 2 sigma event to see not just biotech, but also technology and the broader S&P indices just fall. So you had a lot of pain into year end. A lot of hedge fund managers lost their incentive fee. I mean, going from kind of +10 to -5%, and really having to look out to 2019. So I think the mood started off fairly grim. What was interesting was to see big pharma, big biotech step in to buy these companies. And I'm sure, you're referring to, of course, Celgene and also Loxo, which was acquired for nearly $8 billion
right
at an all-time high price. So I think that, probably a lot of funds and investors didn't capitalize on those as much as they would have liked to, simply because what happens as people take pain and as managers take pain, you have to de-risk, and long exposure gets reduced into year end. But ultimately, I think that it's super encouraging to see big pharma and big biotech say things are so cheap and we are willing to pay cash at these valuation levels. So I'm certainly encouraged, and I think that was the mood at the conference as well.
What technologies and drugs and companies were the talk of the conference last week?
Yeah, I think that, what was interesting about 2017 and 2018 is you saw an unbelievable amount of early stage technologies come out with these mega funding private rounds as well as IPOs. And we're talking about, companies like Moderna, which set the largest biotech IPO ever at something like a $6 billion valuation. And we saw, other companies even in the preclinical phase like Rubius earlier in I think in the summer of 2018 with a very robust IPO. And these are companies that historically needed to be more in the clinical stages, phase 2 or phase 1 to make it out. And we were seeing things come out early. What I think I heard was a little bit of a reticence of public market investors to invest in super early stage, i.e. preclinical companies in the IPO markets. And so I think what we might have is a pushback of companies trying to go public, and rather than going public as soon as they can, may need to mature a little bit more in the private markets.
Interesting. Do you see any biotechs maybe taking the same route as for when they do IPO, maybe going the route of a Spotify and reportedly a Slack, we're doing a direct listing, or just maybe no?
No, I saw that with Slack in particular, and I think that the problem with biotech and the reason they probably can't do that is they need money. Developing a drug costs more and more money than ever. I mean, on the other hand, if you look at some of these technology companies, they're able to commercialize much more quickly than ever before because of social media and because of viral marketing, and that's not happening. In fact, in the drug business, things are getting more expensive. So you're seeing companies, burning $200, $300, $400 million a year. I think Moderna is probably burning close to $400 million a year. And the only way you can kind of finance their growth as they go from, as they've gone from one clinical compound to 10 to however many they'll have, is you need to access the public markets. So I don't see that happening except in certain niche cases, certainly not for the big unicorns in biotech.
Paul, let's go back at Dennis Dick here. Let's go back just to the M&A area here. Obviously, we had the big deal with Celgene, Bristol Myers. Do you see any more consolidation, like the big pharma coming in here? Maybe Merck or Pfizer sniffing around in some of these other beaten down ones?
Oh, absolutely.
And who would be your candidates? Like, who do you think? Like a lot of these things are like, you look at some of these pricing and they're trading pretty cheap. Some of the bigger biotech stocks as well relative to where they were. Is there any candidates there you think that are ripe for maybe somebody else?
No, absolutely. So, I think if you look at what's been acquired, oncology continues to be a super exciting area. So Celgene ultimately is a huge oncology company, and obviously so is Loxo. The price paid for Loxo is pretty remarkable because you have one marketed drug, which is, I would call it a smaller drug in their portfolio, but you have two interesting pipeline candidates. So the fact that Loxo was acquired for $8 billion for a couple of pipeline candidates tells you the price that big biotech is willing to pay. But let's back up the clock a few weeks before that. Tesaro was also acquired. Tesaro has a drug that's, kind of between $800 million and $1 billion in terms of run rate. And so I think that there is definitely interest in the broader oncology space, especially for marketed drugs. I think Clovis, CLVS, is certainly interesting. They have a drug in the PARP space very similar to Tesaro. I should disclose that Clovis is part of our BBP portfolio, as was Tesaro and Loxo. And so these companies in the BBP portfolio are often acquired because that's what big pharma needs. They need drugs. They don't necessarily need products in the pipeline to fill it 3 years out. They need things today. And so Clovis, although a much smaller drug in terms of sales than Tesaro, probably annualizing about $300 million in sales right now, it is interesting because it's in the same general class and there are a lot of different readouts across different tumor types. Another one that we think is really interesting is a company called Allakos, ALLK. And again, for disclosure, it's in our BBC portfolio, as well as we're investors from our venture fund from the Series B. But this is a company that has roughly a $2 billion market cap. They have an antibody drug in the broader immunology space. They just had some data reported at JP Morgan for a condition called urticaria. Xolair is the leader. Genentech, their drug Xolair is annualizing at well over $2 billion. With urticaria being one of the major indications. And when we look at a space like this, an antibody drug targeting immunological conditions, we think that this is a $10 billion plus potential drug. You don't have many of those in biotech. So we expect to see huge interest from the big pharma companies as well as the big biotech companies in companies like Allakos.
Couple of stocks coming from our chat there. What about Sage Therapeutics, SAGE? What are your thoughts on this one?
So Sage is also a very interesting company that's reported a ton of data, interestingly, in this CNS space. It has been a very challenging space. CNS endpoints are notoriously difficult to read. The CEO is very vocal. More importantly, I think once you have a drug commercialized in the CNS space, companies have been having a lot of difficulty hitting street numbers. So if you look at companies like Acadia, for example, a drug that successfully hit all of their clinical endpoints, was approved by the FDA, and they're out there trying to sell it themselves. They've had a lot of trouble, so that stock's been difficult. In the case of Sage, time will tell whether they're going to be acquired or where they're going to, whether they're going to try to do it themselves. But right now, I think that they're certainly one of the leaders in their class.
What about Bluebird Bio? This was one that was rumored earlier in 2018, and obviously it's come down significantly from where it went up over $200 on speculation that there could be a potential to get bought out. Now the stock is $115. Is this one you think that could be, or is this a different story?
Yeah, no, absolutely. So Bluebird is one of the highest quality biotech companies in our space. They have a variety of different technologies and diseases that they focus on. They're one of the leaders in gene therapy with a couple of different technologies, including what we call lentiviral technology, which is different from this AAV technology that a lot of gene therapies companies have. And they also have big programs in some rare inherited diseases like beta thalassemia and also some earlier stage programs for these monogenic inherited diseases. And so it's a pretty broad platform. They're extremely well funded, so they don't have to do anything like some companies which are running out of cash. So I think that this is a company that, if acquired, it would be acquired out of strength. Where you'd see big pharma companies saying this is a platform, a gene therapy platform, and a rare disease platform that we really want to have. And so Bluebird is definitely interesting. I don't know that it's acquired anytime soon. Valuations in gene therapy have been fairly rich. And as one of the outstanding ones, they've had probably the largest market cap in the space. But as you point out, coming down by nearly 50%, people might be sniffing around.
Paul, a quick question, because and I apologize if it's ignorant, but I actually don't know the answer to it. What happens to a stock in your fund when it gets bought out?
Oh yeah, we have a ton of companies in the fund already. So what we'll do is we'll either just increase the positions across the other stocks, or if the timing is near one of our rebalance dates, we'll just add some other positions.
Got it. All right. Yeah, I've never had a stock in any of my any of the funds that I own get taken out, so I didn't know what happened. But thanks for answering that. Paul Yook is the co-founder of LifeSci Index Partners. He's the PM of the BioShares ETFs, BBC, and BBP. Paul, as always, love your insights. Thanks for the time, and we'll talk to you soon.
Anytime. Thanks a lot, guys. Talk to you soon.
All righty.
Bye-bye.
All right. Dennis, were you buying CROX back in 2011 and I mean the stock, not the shoes, in
I wish I was.
July, August 2011? Because if you did it, congratulations, you're just about got your money back here this morning.
It's all the way back to where
finally.
If you want to talk about a stock that has come back, it's incredible, actually, the CROX story here. Everybody had this for dead in 2017. Let's get down to $5. This has got to be, in the last year and a half, one of the best performers out there. 5 to 30. It's trading $31 here this morning. So the shoes with holes in them, it's back.
I don't know if I've ever mentioned this, but I do own a pair of CROX slippers that I don't wear them in public ever. I do that. But I only
Actually, you want to know? I think mine are the knockoffs. I don't think mine are the real Crocs. They got holes in them and they look like Crocs, but if I look, I don't think I have the Crocs. I got the knockoff ones.
Yeah, oh, you would have those. But anyway, so CROX raised their Q4 and their fiscal year sales this morning here. Hence the reason they're trading up. They raised their Q4 sales guidance by about $15 or so $1 million, 195 to 211 million on the low end of the range. The fiscal year sales growth guidance raised by a couple percent from 4 to 5% to around 6%. And look at CROX. They're not dead yet.
That's unbelievable. I'm shocked every time I look at that chart. I was shocked when it was 20, shocked when it was 25, shocked when it was 30. I don't know why, but it must be popular again. The stock's doing okay. Am I going in here and buying it at 31? Nope. But congratulations to everybody who's been buying it for the last year and a half, because they're all up money.
And not looking so great on the other end. Other side of the coin here, Tailored Brands, TLRD, they cut their Q4 and their fiscal year EPS guidance. They cut it. Let's see. Let me read some numbers if I have them for you. Cut the Q4 EPS guidance by only a few cents, but they are going to lose. They're going to lose, so they say 26 cents per share this quarter. They cut their fiscal year EPS guidance by 5 cents, so nothing crazy, but they're only making 2.25 for the year. So that's the story here on Tailored Brands, TLRD.
It's been a disaster. I mean, it did get up in 2018 over $30 again, and then by the end of 2018, almost giving it all back. Here we are at 2019, we're $12. You've had major support multiple times, $10. Back in 2015, we got down to $9.95. 2017, we got $9.40. I'll round it to $9 to $10. That's where you found support. I don't know if it's going back there and testing it again, but I don't see why not. So if you get down to 9, 10, maybe it bounces a third time down there, but the story has just been terrible. Yes, it is a 5.76% dividend. I can't say how safe that is, but the story has just been terrible.
Yep. All right. 8:52 here. Let's go to some ratings, because we had a couple, and I haven't looked at my calendar here since the top of the show, but just off the top of my head, we have a Snap upgrade at Citigroup. We have, Dennis, you are the big ones here. What were some of the big ratings this morning?
Oh, I just closed it up, Spencer.
Oh, no.
I have a few written down here. So Snap was upgraded at Citigroup. Alcoa got an upgrade to buy, which is AA at Goldman Sachs. Chevron got downgraded at HSBC. I got Delta getting a downgrade at Bank of America. I got Western Digital, not good for my portfolio because I own this, getting downgraded to sell, the equivalent underperform at Evercore. That's getting hit really hard here this morning. Micron, negative commentary from Morgan Stanley, and they took down the numbers. I don't believe there's a rating change there, but if you're looking at Micron, why it's so weak this morning, Morgan Stanley came out with a very negative note. That's why Micron's down as well. Not good for my portfolio either, because I do own some Micron in there as well. PPL, downgrade to sell at Bank of America. Those are probably the big ones. There's probably about 40 of them. So if you got a smaller one, like NOC caught a downgrade, I believe, as well today. So there's a few, but those are the major ones.
All right, surprise guest here this morning, and I'm going to call him right now and bring him on the fly. He's supposed to be calling one Joel Elconin. Let's see if he answers his phone. I don't even know.
Good morning.
Hey, Joel.
Yes.
Joel, you're with us this morning. How's it going?
I'm good. You're down in Florida, right there, Spencer?
I'm in Florida. You're in where? Virginia?
No, I'm out of Virginia, and I'm in Metropolitan Airport going to Detroit. But
okay.
First things first, I want you to make sure that you put on suntan lotion because you have that fair skin. I don't want you getting burned down there.
Well, I've been here for a day and I haven't been outside yet, really. So, all right, I'll make sure to put some sunblock on today. Joel, I know you're out of town. Have you been watching this market these past few days or not?
Well, first of all, don't let Dennis go long 10,000 shares of PCG. Okay,
I won't.
No matter what. That's down 7 sticks, right?
Yeah, he can hear you. He can hear you.
No, I just saw the news. I'm just getting quotes on my phone, so I don't have my usual analysis. But following the SPOOs real closely, man, and we just got a wall there at 2,600. I mean, can't count the daily highs there, but big psychological level, and it just will not going through there. So until we go, until we can take out 2,600, close above it on the March contract, it looks like we're trying to give back a little bit of this rally. And tight range, fairly tight range last week for the SPOOs. So keep an eye on last week's low. If it takes that out, the more downside. But man, Bank America 26 looks like you're getting a little wall there. General Electric, it just can't get through $9. It just seems like sellers and buyers are coming to agreement here on some prices, and we're going to see. We're going to get a move soon, but until we can't take out 2,600, I'm leaning to the bear side. What do you think, Dennis?
Yeah, you know what? We talked about this last week on the show as well, and I was even saying, I think if Joel was on the show, I think he'd be talking about this 2,600 level there. And you know what?
Yeah.
3 days in a row, we kind of topped out. Just 259 on the SPY, looking 3 days in a row. You could call it a little triple top there. We're stalling out right where you would think we would stall out. So it's funny how this S&P has really played out. Almost like a technical, like textbook play, where you had the significant sell-off. And Joel, I don't know if you've got us on in the background. I hear static there.
Joel's in the airport.
Oh, Joel's at the airport. That's
Joel's
why.
at the airport.
So tell the airport people to be quiet, because we're trying to do a live radio show here. But it's like textbook, 280 down to 230, the 50% retracement kind of. If you go 50 points, 25 points, it kind of takes you up to 257, 258, right in the area here where we're stalling out. There's a lot of things to like here as a bear still. Until you get above 260, that's what I was saying on the show last week. Until you can get like the close above 260, I think, I'd be cautious here.
And what do you got? Earnings starting at the end of the week, correct? Is that
Citigroup this morning we had. So Citigroup is trading
okay.
slightly down, but holding up okay considering they had a revenue miss. It actually went green there for a little bit. It's given some of it back, but down about 1% here this morning. But the market's down almost 1% too, so not a disaster yet. But yeah, this week you got tomorrow JP Morgan, Delta, Wells Fargo, Wednesday Bank America, Goldman. You've got Thursday Netflix and Morgan Stanley, Schlumberger on Friday. So you got some big guns coming out here. We're just getting a kick started really this morning with Citigroup.
Okay, I would keep an eye on the financials. I mean, there's always different sectors leading, but what I noticed, I was looking at some charts over the weekend, Bank America kind of turned ahead of the market. When we went down and we made new lows, it kind of, it held up and it turned up a little bit before the market. And then when the market continued to rally last week, I mean, I know it snuck over 26 last week, it just kind of stalled. So, it makes sense with the financials having the earnings this week, the market at a turning point. I think that, that could be your leader. And with, like I said, with the earnings coming out, it's important.
All right, Joel.
You guys still there?
Oh yeah, we're still here.
Yeah, we're still here. I don't want to wait. Are you catching a flight or are you already in?
Yes.
Okay.
I'm actually early for a flight. I am early for a flight. It boards in 43 minutes. I'm going to New York just for the day. I might be able to swing it tomorrow. I have a close family relative that's presenting a documentary. And there's 25 people from my family, my sister, everyone's just gathering in New York for the day. So it's something at the Lincoln Center I didn't want to miss. I do miss you guys though, man. I miss Dennis complaining. Has Dennis been complaining a lot?
He hasn't had a winning trade in a week.
I never win. I don't know why. I don't know how I've been business in 19 years. I talk about my losers. I'm a complainer. I always say, I joke with my other buddy, Bray Trading, we joke, and it's like I could have like 50 winners and one big loser on one loser on my screen, and I'd be mad about that loser or whatever. So I don't know. I got to start getting more optimism in me. My glass is half empty half the time.
I just
what is that from the quote from Anchorman? 50% of the time, every time.
That was good.
Another movie quote.
All righty.
I just heard Paul Yook, and man, that guy's smart, Spencer. That was a great interview. Good job on that. We'll have to get him on again soon. And Spencer, I'll ping you if I can make the show tomorrow. Okay.
Okay. All right, Joel. We'll let you go.
All right.
Don't miss your flight.
Yeah, they're
Go
called,
Bill.
I heard his name being
They're
called.
calling.
Go,
They're
you're
calling
being
your name,
paid.
Joel. They're calling your name, Joel. Go make your flight. All right, 8:59 here, folks. That I guess we'll do it for our show. Wow.
Oh, we should do balances. We can make balances.
Okay, let's do some balances.
AT&T 80,000 to sell, Pfizer 67,000 to sell, Merck 54,000 to sell. Those somewhat stand out. Alibaba 46,000 to sell, Gold Corp 178,000 to buy because of the buyout. They're pretty much selling balances. They're small though, but they're kind of across the board, which to be expected on a day that we're down 20 handles.
Okay. Fair enough. As for tomorrow's show, we'll be joined by Nick Shaheen as at the usual time, and Jeff Hirsch at 8:15, author of the Stock Traders Almanac. So that'll be on tomorrow's show. If you missed any part of today's show, catch our podcast. You know the drill: iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or just watch us on YouTube. Thanks to our guests today, Paul Yook and Wragge Horner. Please remember, all the information on our show is for informational purposes and not meant to be investing advice. Hope you folks had a good weekend. I'm sorry if you are a Eagles or any of the teams who lost this weekend. Eagles, Cowboys, Chargers. I'm sorry, Colts. Sorry to all you folks, but I hope you had a good weekend if you don't live in those cities. And hope you join us again on Tuesday. Have a good one.